Shares of the Dow component Microsoft ended only slightly higher today, despite making some bold moves and costly ones to attract more interest in its stock as the company prepares for a lot of changes in the months ahead. Our Josh Lipton has more.
This morning, Microsoft announced a $40 billion stock buyback, as well as boosting its quarterly dividend by 22% to 28 cents per share. The board approving the new stock repurchase plan to replace the previous program, which was set to expire at the end of the month. Microsoft, known for its shareholder-friendly actions, it has been paying a regular quarterly dividend since 2004. Colin Gillis of BGC Partners covers Microsoft, says he wasn't surprised by the relatively muted reaction from investors to the news.
Because they increase the dividend most every year, right? So last year in September you got a 15% increase. This year it's a little stronger. It's a 22% increase. But the yield is still stuck somewhere. It's about 3.4% right now. That's somewhere between a 10-year bond and a 30-year bond. Now it's better than the yield that you'd get from owning Apple, right, who have just started paying a dividend, but it's lower than what you would get from owning Intel.
The news today of the buyback coming amid a lot of which would help shift the company's focus to tablets and smartphones. Earlier this month, Microsoft surprised many investors and analysts when it decided to buy Nokia's device business for $7 billion in an attempt to compete with Apple and Samsung in the global smartphone market. Then last month, Microsoft announced that its longtime CEO, Steve Ballmer, would be retiring during the next 12 months. The stock today moving higher on the news, now up over 20% this year. Last year, remember, it was up just 3%. That stock now currently on track for its biggest yearly gain since 2009. For Nightly Business Report, I'm Josh Lipton.